did want to come back to Amazon because you sort of had an interesting call on it today, thinking that it's bottomed. There is a question, though, about margins. And obviously, we saw what happened with Target, inflation, fuel costs, transportation, wage pressures, EBIT down, 20% there. We obviously saw what happened with Amazon in terms of wages, fuel cost issues, oversupply of workers. But what about on the margin side? I mean, have the PEs adjusted for the expectations that margins are going to be under pressure, Jim?
Great question. I guess I'm thinking about that you have this Amazon Web Services business, which we all know is really powerful.
Yes.
The actual multiple is still way too high for Amazon. But Amazon Web Services is one of the fastest growing businesses on earth. And we now know that the retail business they didn't lose share. And they have to lay off a lot of people. Who knows what the actual number is? They have way too many people. And so Amazon, by the way, Meta, Facebook, these places are all coming to realize, you know what, we were hiring, and we've hit the wall. And if they've hit the wall and they're good business people, then I think that a guy like Jassy says, all right, we're done. We're done spending all this money. We're going to go back and be more rational. By the way, Shipt, which I use all the time, the Target thing, we use Shipt all the time for bad money. And it's like somebody will say, like Dylan Reebok will say, I need a Diet Coke. Let's get that from Shipt. I mean, these places have to start charging a little more because people are abusing the heck out of it. They are. Hey, you know what? I need some Ritz crackers. Let's ship that over. I mean, honestly, they've got to stop it. I don't think people realize how much this price war is costing these companies. They need peace. They have got to stop it.
But for things like that, you've got the private company GoPuff, which that's their business, delivering
DoorDash. How about Tony
delivering
Schumer?
Yeah,
But I'm just saying that people that left out of all these conference calls was the absurdity of how much people are abusing their same days.
Sure. We haven't mentioned the buyback over at DoorDash, $400 million to offset some of the dilution from RSUs. Kind of an interesting turn, a strategy on some of these names, right, Jim?
Yeah. I think that Tony Hsu's an honorable fellow, and he's trying to figure out exactly how to keep people with DoorDash. There was a Grubhub fiasco this week, which I don't know if you saw the Grubhub where all the Dashers, everybody switched to Grubhub because Grubhub had this
promotion.
But the promotion.
Yeah.
But every restaurant was hurt by it. Everybody was hurt by it. But no, Tony Hsu is showing great honor there. What a terrible stock. Airbnb, terrible stock. And the company's doing okay. They're going to make $1 billion. It was more than $1 billion in cash.
A couple days ago, Morgan Stanley pointed out that global RevPAR overall is still doing well, but May's beginning to show a little bit of toppy action, which would have huge implications for hotels and Airbnb.
Yes, it would. Now, you don't want to own those stocks if the Fed does this 50-50 thing, because it's obvious that they're long-dated assets, and a long-dated asset is losing value.
It's interesting on the DoorDash, just to come back to it, as Carl said, of course, done to offset the dilution potentially from RSUs that they issue to their employees, which is part of their compensation.
Right.
I brought this up before. We've seen it in other periods where there has been a significant downdraft in, broadly speaking, technology stocks, particularly growth ones, where these companies, especially earlier stage, a lot of compensation is made up of stock.
Right. Well,
and then the employees are like, I don't want any more stock. Well, I want cash.
Historically,
which obviously has an impact on your margins.
Historically, you have pointed out over and over again that the earnings are facetious because of how much they're paying with cash.
It's adjusted EBITDA, and they adjust for things of that nature.
But those Zoom 400 RSUs, when instead of 400, how's that doing?
Not good.
No. A lot of people in this country, Carl, a lot of the younger people thought that the way that they could get rich is to go to these NASDAQ companies and take stock.
Yes.
And they're not rich. They're looking for other jobs.
It depends on the window. If you hit it right, you got rich. If you joined in 2019 or 20 and you got out in 21, you're all right.
Yeah. Needham's done some work on, for example, Netflix. I think you'd have to have joined before 18 in order to be in the red.
In the green now, yeah.
Take cash.
Black.
Right? Take cash. Don't take stock.